Development Debate. But let me move on to the topic that we're going to discuss in a bit of detail, and that is inflation. A lot of data coming in over the last 24 hours that we need to break down. So US consumer inflation in Jan came in at 6.4%. That's the latest. It came in just a few hours ago. This is versus an estimate of 6.2%. So it's a higher than expected estimate, but the growth in inflation rates has consistently been trending downwards, as you can see from that chart. So that was a bit of mixed news as far as US inflation is concerned. Now, India's wholesale price index numbers also came in today, and that was at a 24-month low for the month of January. But headline inflation, which is the CPI, which came in yesterday, was back over the RBI's upper tolerance limit and higher than what was expected overall. So 6.52 was what CPI came in yesterday. The expectation was 6. So what are we really seeing? Are these anomalies in data? Is it pointing to a broader trend? What is the precedent being set down for the Fed and, of course, for the Reserve Bank back here in India? Before we get to that conversation, let me go across to my consulting editor, my colleague Maithili, who's breaking down India's WPI numbers for Jan.
Well, after some very disappointing news on retail inflation that we got yesterday, the CPI inflation came in at a 3-month high of 6.52%, reversing the declines that we'd seen in the previous 2 months. We finally got some brief respite as far as the WPI, or the wholesale price inflation, is concerned. Wholesale price inflation for the month of January has come in at 4.73, down from 4.95 in the month of December. Of course, I called only a very brief respite for 2 reasons. A, the decline is very nominal. B, it is the RBI does not look at the WPI at all almost. It looks at only the CPI. Under inflation targeting, it is required to keep inflation, the CPI inflation, between 2 and 6%. And what is even more disappointing is that even in the WPI, it is the primary articles and the food articles which have registered dramatic increase, clearly showing that food inflation and more worrisomely, retail price inflation is not going to come down in a hurry, and that is bad news, particularly for a Reserve Bank of India, which has been struggling so hard to bring inflation down with repeated rate increases and no luck at all. So it seems as the light is we're nowhere near the end of the tunnel as far as inflation is concerned.
What's the consensus as far as inflation is concerned? We're nowhere near the end of the light in the tunnel, says Maithili. So some more pain to go. Anurag Singh, managing partner at Ansett Capital, with me today on the show. Jeff Dennis, independent emerging markets commentator, joining us, as is Garima Kapoor, chief economist at Elara Capital. Welcome to all of you, and thank you so much for speaking with us this evening on the India Development Debate. Anurag Singh, let me begin with your take. And let's start with the US inflation data. Is there a bit of good news there, or is it mixed? Will you hold off before saying at least the trend is consistently going downwards, and this is, if I'm not mistaken, the smallest quantum of growth in quite a while?
So, Tamanna, this is, I don't see it as a good news, and I think markets took a while, but I think now if we see, they're just trying to absorb that this is not good news. I think let's just, in this maze of data, and I also see this, you running this graphic on the screen, I think let's just take a step back and see. Federal Reserve has been at the task for about 1 year now, right? And we went from 0 to 4.5% FOMC rates. Inflation has barely budged from what 9.1% to like 6.5% now. And by the way, let's not forget, the battle from 9 was very driven by energy prices as well, right? So nobody expected that we'll stay at 9 or 8.5. We always thought somewhere the core inflation, which is stuck at 6%, will cool down. But I don't see that's happening. And the progress is very, very, very marginal, right? And I think it is not very surprising. It just depends on what hat you wear. If you wear a market hat, then I think you are always optimistic and try to make an opportunity. But I think if you're an economist, you clearly see that the numbers are not really moving, and inflation typically behaves that way. Remember, it has come up after 40 years. It's not a problem that most people have seen in their lifetime. And so we don't know how to tame it.
We are trying to throw several things at inflation when you say we don't know how to tame it, and rate hikes seem to be the favorite tool in the toolbox of central bankers. Question is it working? Jeff Dennis, when you see that chart, and US inflation is what I'm talking about, with it trending consistently downwards, does it show that the Fed's efforts are bearing fruit?
Oh yeah, I'm a little the other way. I'm a little bit more the glass half full here in terms of the inflation progress. First of all, I think this was always going to be a difficult one to read because there were changes in the seasonal adjustment factors, there were changes in the weights, and energy prices rose. We knew that was going to happen. So I think there were all sorts of reasons why you could have got a really nasty shock to the upside, and you didn't get that. Okay, it was the monthly number was in line with expectations, 0.5. The core number was in line with expectations at 0.4. And yet the year on years were a little higher because of the, I guess, the change in the seasonal adjustment factors going backwards. So I still see this as being a situation where inflation is going lower and there's going to be sufficiently positive base effects going forward that I still think we've got a very good chance of getting inflation down to around 4%, 4 to 4.5% by the middle of the year, and somewhere around 3.5% by the end of the year. So I'm more positive about this. There has been very good progress. And although obviously the labor market looks strong, fair enough, we don't know how reliable those numbers really were for January, the payroll numbers. They could easily be revised. At the end of the day, wage inflation is pretty subdued. So I think inflationary pressures are gradually falling on trend. And a lot of the noise in this data is just that. It's noise from the change in the weights and also from the seasonal adjustments. I don't think this is a bad number at all.
So it's not a bad number at all. Garma, let's come in first on what US inflation is looking like and how markets are going to respond to it. Is inflation now a factor in domestic markets as well?
Right, Tamanna, it clearly is. I think, especially after yesterday's CPI reading, where the number came in much above expectations. In fact, I was above consensus. The number surprised my consensus, my number also by 30 basis points. Right. A bit of anomaly, the number that is the serial inflation subcomponents both don't tie in. But beyond that, there was a reversal in food inflation trend, which was on a declining trend. And your core CPI, which has been the worrisome point for RBI for quite some time, continues to remain very sticky. Even an average CPI, core CPI of not less than 6% this financial year, and you have seen that yet the demand for your services sector is not cooling off. That means you still have some pricing power left. And if you talk about sector that you just spoke about prior to this segment on the aviation, the demand supply dynamics is still a bit skewed. So there is still some pricing power that is left in certain subsegments like aviation or otherwise, which tells you that you're not going to see a significant cooling off of services inflation at least another quarter or so. So I think the numbers are not very, very encouraging. Yes, WPI is cooling, but largely because of base effect and also because of your fuel factor starting to reflect in. But the factors that were working for a couple of months prior, that is basically your food, have now started to reverse, and that's not a good story for India.
Yeah. The food inflation pain that you're seeing, Garima, I want to come back to it because, and Maithili spoke about that as well. The WPI picture is optically looking better, but sticky inflation, core inflation remaining sticky is a problem. Will that picture change in a few months depending on monsoon, or are you expecting pain for some time?
I think a couple of months of more pain, and I think in the near term, and as when I talk about near term, it is first quarter of the next financial year. There are a lot of factors that could turn positive. For example, you have an arrival of the winter crop. At the same time, the discretionary goods demand in India is weakening and weakening quite perceptibly. So the pricing power is going to come off there. At the same time, you have elements that you have an impending cut in the fuel prices, the pump, which has not happened for nearly 4 to 5 months now. Also, the global level prices have declined because OMCs are covering the past losses. So these three factors tell you that as you enter the first quarter of the next financial year, things should not look as negative as they've looked at as we stand. But at the same time, remember, unless you see a sustainable correction in core, which has been the moot point for MPC, and as well a very strong part of the commentary of RBI, RBI will not probably be hastening enough to change its stance. So I think there will be another room for a rate hike, the probability of which only has increased after yesterday's spring.
All right. So the RBI was very hesitant to commit to a pause in the rate hike. And now we know in hindsight why exactly the governor was not keen to go out and say the worst is over, or, we're seeing the light at the end of the tunnel. Having said that, Anurag Singh, how do you think that the Fed will respond in the weeks to come? And do you see inflation as continuing to be the dominant theme of 2023?
So Tamanna, and I think that's where the conundrum lies. You can read Chair Powell is saying almost everything in the debate, and you can pick what you want, right? And so markets pick the word disinflation, whereas he was constantly saying that we will stay at it until the job is done. And pivot is kind of not even a near possibility in 2023. So, but I think markets were counting that somehow if there is a sudden dip in recession and the economic conditions, tighten, the Fed will be forced to cut rates, right? That was the call. Look, I think Tamanna, Fed has come off the high horse of 75 basis points. So it is at 25 basis point equation now, because somehow it feels that a rate of near 5% is good enough, right? But the constant messaging that the Fed will send out is that they'll keep doing 25 basis point as long as it takes. And that's where I think at some point markets will realize that, Fed is really walking the talk, and the inflationary expectations have to come down. Inflation, Tamanna, I just want to leave with this one point, that it's very unusual why the inflation doesn't come out so easily by hiking rates, because it's more of a mindset and as an expectation game as well. Because the inflation has got, markets have come to expect this inflation. What is inflation after all in US? 75% of that is all about wages. And if the wages are not cooling off, then the employers are likely to pass on the wages as expensive goods and services to the rest of the economy. And so, as long as the labor market stays tight, unemployment stays at 3.4, it's very, very unlikely that we are likely to achieve that kind of so-called soft landing. It has not happened, and not with this high inflation. It has never happened in history.
Jeff Dennis, are you slightly more optimistic that soft landing is around the corner?
I am a little bit more optimistic, but I must admit I agree with what was just said to a greater extent than I did at the beginning. I think that it's unrealistic to expect the Fed to cut rates before the end of the year. I still am penciling in myself just 2 more rate hikes to just over 5% by May. I think there's a possibility they will go a little bit higher than that, but I don't see all these data points recently, the payroll number and this one, as I say, which has got a lot to do, I think, with mechanical adjustments in the index. I don't see these forcing the Fed to go dramatically higher. What I think is interesting is the Fed's job is not to get the unemployment rate up. The Fed's job is to get inflation down and wage inflation down. And there is so much funny stuff going on in the labor market that, frankly, nobody understands properly, I think, post-pandemic. That I think what we have to do is not so much focus on the unemployment rate. I think the Phillips curve link between wage inflation and unemployment is broken. What we've got to do is follow the numbers, and the numbers are telling you CPI is coming down, wage inflation is coming down, albeit relatively slowly, or at least it's certainly not running out of control. And I think what that does mean is there's a limit to how much further the Fed goes from here. And I'm still factoring in 2 rate hikes from here to, as I say, to just over 5, with no rate cuts over the rest of the year. And on that basis, I think unless we get some more shocking data going forward, and I think the labor market data for January is probably going to get revised away in some sense. I think unless we get more shocking data, I think we're going to find that, the market's eventually going to realize that we haven't got a lot more Fed tightening still to go. The job here is to get inflation down, and the progress is still there. It's slower this past month, but it's still going downwards, and all the short-term momentum of these CPI numbers suggests we're going to be quite a bit lower than this by mid-year, and quite a bit lower still by the end of the year. So yes, I am a bit more optimistic about a soft landing, but I'm not watching unemployment. I'm watching wages, and I think that's the key.
All right, so wage rates in the US, a big determining factor. Food prices in India, a big determining factor. And both are sort of trajectories we need to watch more closely. Thank you so much to all of you for joining us on the conversation. We'll take a very short break here on the India development debate, but a lot more coming up on the other side. Stay tuned.